What's going on, you dirty apes? Hope everyone's having a blessed day. This video is going to be an update on BTC and some of the ideas that I'm basically planning for. The way to look at charts is don't I mean have a bias, but be able to step aside from your bias and see two, three alternative scenarios, especially if you're in a echo chamber and everyone's basically yes manning you. And if you're all seeing the same chart, usually it's a setup for a big letdown. So just try to work out different scenarios. This is going to be an example on how to do that. So we're looking at the weekly chart on Coinbase, and you can see this was the previous all-time high. This was a raid of the previous all-time high. So this would be considered structure from the previous cycle, right? We go into the current cycle, and you can see we spent here 245 days adding structure to this. So in my opinion, this is going to be a solid foundation if price does come down. I'm not saying it will, but in the event that it does get to like 69 to 64K, there should be a pretty substantial bounce here, and there should be a very aggressive bid if we get down to that level. Now, on the monthly, just to break it down in multi-time frame, highest time frame is the monthly. Down here, note that BTC, after it hit the all-time high, it retraced into the deepest monthly imbalance here, leaving a small one below that, but this is the most obvious one, retesting the previous all-time high, and then it took off. Currently, we've rebalanced the largest monthly imbalance we've ever had. There's some other ones down here, but you'll note that even on the way up, the first obvious imbalance on the monthly got tagged, and then it continued to reprice. This whole bit of price action, this fractal right here, was ETF driven, right? So everyone was basically max bidding, speculation of the ETF. So obviously there was irrational repricing in this range. So I don't think that we're going to go back there, just because now that we have ETFs and a major structure in the range, we have a really good foundation. I don't see it breaking through here. So if you see it on the daily, this is crazy how much structure we spent and how much time we spent in the range. So honestly, I think that's going to hold really well. Now here's what I see. This is a previous chart that I had for the BTC roadmap. It's never exactly the way you plan, and you have to always account for the market being irrational and getting overbought, oversold within a range. But regardless, the plan was it's following a liquidity model where basically it hit this external low, then it retraced this dealing range into premium, this imbalance right here, rejected, came back and took the low. So basically external to internal to external, and then it's back into this original internal imbalance. Obviously that's not an active one, so it could actually play out where the third move is in to take these equal highs. So just be aware that 88.8 has a lot of liquidity here, and if things are bullish, we could easily take those highs, right? And then my original idea was, after taking these highs, we eventually make that drop into this zone. And the reason I'm thinking that zone is because you have a daily imbalance right here. So a very obvious one. It's the deepest of the three in discount within the range. Also, you have a 3-day imbalance. So they're overlaid on top of each other, right? Here's your 3-day. We've already rebalanced the upper two. This is the only remaining zone that needs to be rebalanced. That's why I'm thinking that's going to be the bottom in the range. And again, if things are really capitulating at the bottom and they're baiting bottom shorters, you're going to see a fast candle into there, and it might overshoot the target into structure, but I'd imagine that structure is going to hold if we get below this imbalance. So use the imbalance more like a draw on liquidity, where price should go to. It should draw toward that if it takes these highs and rejects. And use the structure as kind of like the catcher's mitt that is going to catch price and decelerate in the range before potentially getting a bid back up. So that was the original roadmap. On the daily, this is what I'm seeing. Very clear structure. We took that high. So after taking the external high, the deepest internal imbalance would be the target. Within that, you could see some structure that formed on the way down. Again, this is the sell side of the curve. We're looking to trade the buy side of the curve once it does make a bottom. I don't think we've made it yet, to be honest. We barely tagged the 3-day imbalance and we haven't touched the daily yet. What you do have is order pairing above that high. You have a drop into the first distribution leg and then a close below this wick right here that formed the high. So here's your second distribution zone. And then typically these resolve after 2 distribution legs into the target, which is going to be the high time frame imbalance. So I'm waiting for this drop into the imbalance for the buy program to start, and then the idea would be you're just trying to play the buy side of the curve. This is where I'm going to be looking for swing longs. So this is the sell side of the curve. Once we hit that target down here, the high time frame target, you're looking to play the buy side of the curve. And in this leg of the move, potentially up, no guarantee, but if we do end up bottoming here and we start running up, alts are going to be destroyed when they get here. So the idea is to pick up some swing longs when we get down here, and any spot bags that you believe are dramatically underpriced and have a lot of room for upside. So everything is going to be opportunity cost down here. Like if you're looking at one coin that has a potential 2x in it, but then you have another coin that is a potential 10x to get to the main target, you always try to go for the one that has the more potential upside, right? So treat everything like opportunity costs when we get this low, if we do. And then lastly, when you're trading these MMXMs, you're looking for the failed swings on the way down. What those are basically highs that form before breaking structure again that didn't take out the previous high. So if you get a bunch of these on the way down on the sell side of the curve, then what you end up getting for the buy side move is low resistance liquidity. So typically when you have clustered highs like this one right here, when they get into the range, it's very easy for price to slice right through just because this is low resistance liquidity. When these stops get triggered, eventually they push price into these stops and these ones, and that's how you fuel the buy side. So I'm watching this MMXM, and I don't think any MMXM guys have pointed this out, but a lot of them are a combination of, like if you take the final stage distribution here into the low, which I'm expecting to be the manipulation, these typically form an AMD model. So you can see what I've marked out here. That last part of the distribution here, not this scam up that immediately got retraced, but this wing right here, you have a consolidation range. That is going to form part of your accumulation, right? So big money, smart money, what they're doing is they're keeping it in this range and they're accumulating at the lows. Basically this low, this one, and eventually if we do get that manipulation move, they're going to be accumulating these stops as well. So this is what I'm seeing pretty much on the high time frame. I'm seeing one more drive into the manipulation zone, and then this AMD model where you accumulate, manipulate, and then distribute into these failed swings, and not necessarily the original external high, but definitely take out some of these failed swings into premium, which is going to be between this high and wherever the manipulation ends. So if we say like 71.7, this is your equilibrium. We're basically looking to trade swing trade alts and BTC from this manipulation low into premium, wherever that is. So especially if they don't take out these equal highs in the range and we get the flush first, then I'll be even more confident this is a high probability setup into premium. So really watching this on BTC, I think the way the market is moving right now, we do get these volatile moves in both directions that basically flush out high leverage traders. But ultimately, these moves are very drawn out. They're not happening overnight. I feel like the cycle is extending, meaning we used to have these four-year cycles between Bitcoin halvings. I think that's getting prolonged. Like these four-year cycles are dragging out to extended cycles like 6-year and 8-year. And I believe as adoption and the market cap of BTC continues to rise and people start opting for digital gold instead of the tangible gold, I believe with adoption and a higher market cap, these cycles will be less volatile, so there'll be less blow off tops, but also they will extend, so they won't be 4-year cycles like we're used to. Obviously the hash rate in Bitcoin halving, that's still going to be a factor for when the market is going to be bullish and bearish, but I believe that is going to be changing very soon when the market cap really starts to climb. So that's the Bitcoin overview. I have a few more videos that I'm going to publish today, and including one on where to buy spot and when the market should be transitioning from a trader's market into a holder's market. So stay tuned. I'll put those up shortly. Thanks, guys.